Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Well, as usual, now let's shift to the gold market and discuss what has happened yesterday on the gold market. The gold market, we see that price still stands in the tight consolidation. That is, in fact, a lot of overlapping trading sessions, and market is calling between the weekly pivot point and weekly pivot resistance 1. We have said millions of times that this price action is not looks like that thrusting action, or doesn't have some impulse nature, but mostly it looks like the contraction phase of the market, and that in fact doesn't allow us to treat this as potential starting move to the upside, some kind of the double bottom or something of that sort. Now it more looks like the consolidation up to move down, and now probably the odds are greater that move down, or greater for a down move rather than for the upward acceleration, at least currently, at least how it looks like in the current moment. Well, since we didn't have yesterday any significant patterns and any intraday setups that we could trade, that's why we said that we should wait here the major breakout of the major level. As we have spoken about the breakout to the downside, we said that we need to see the breakout of the 1380 area, because that is previous resistance. You can see market has stand around for the long period, has broken through. Now this is the support. So if market will return right back in this consolidation, you can see below this level, that's now also the weekly pivot point, that will tell us that we could count on the move at minimum to the opposite border of this consolidation, that is around 1320 area. That's our major level to watch for, major setup for the downward action. Or if market will proceed high, we should watch for 1430 area. But currently this perspective looks a bit blurred, since this price action doesn't give us any clues and confidence with thinking about this potential move to the 1430 area in the nearest future. Well, yesterday we have seen this splash up as the stock markets has started to fall, as some hints were made on the potential close of the quantitative easing program. The mortgage rates on the United States also have fallen from their lows. That all adds some nervosity to the market. On that new news, gold market shows some kind of depreciation. But take a look what the kind of depreciation that was. As you can see, splash up, clear out of these previous highs, some kind of the wash and rinse of these highs, returning right back down. Market moves again below the weekly pivot resistance 1. And since the weekly pivot resistance 1 holds this move up, this tells us that probably only the retracement. Until weekly pivot resistance 1 holds opposite move compares to the previous action, this should be treated as the retracement. If market exceeded, then that will be another tune, that will be something different. But until that has happened, this consolidation doesn't let us to think that probably we should be ready for the upward continuation. On the 4-hour time frame, in fact, we do not have nothing interesting. All that we have currently is on the hourly time frame. Well, although we said that previous butterflies that we have discussed on the 4-hour time frame, on the hourly time frame, as you can see on the 4-hour time frame, initially we have thought about this butterfly. On the previous, in the beginning of the current week, we have discussed this potential butterfly, but as this pattern and this pattern has destroyed their shape, and currently it's very, in fact, it's not quite correct to treat it as the butterfly patterns. In general, on the 4-hour time frame, we see the choppy price action that also doesn't look like the impulse acceleration and potential that we could call as an upward trend. That's some sort of the retracement mostly. That's why on the hourly time frame we have the single pattern to deal with. That's for scalp traders. we have this smaller butterfly that market has shown the breakout with this triangle, and he's hitting this 1424 area, clear out the highs right here. So that was some sort of wash and rinse, returning right back. So if you would like to trade based on this pattern, you could try to take the short position with the stops above these highs, this profit somewhere inside of this swing probably. Well, but personally I'm not very fascinating with this pattern, and I think that it will be better to wait still for major event on the current market. This event is the same as yesterday for the positional traders who trade on the daily time frame, and for us I think it will be safer just to wait when the market will show the breakout right here, or will show some other action that will that could give us some clear context on the gold market. Since market now calling a very choppy and volatile price action, well, it's very risky and expensive to trade some short-term setups. That really it's very difficult to catch the nice entry point with this butterfly. For instance, if you would like to enter short here, where you place your stop somewhere above these highs, where will be your profit? Well, if market will show just a 618 retracement and turn to some coil or some move to the upside, the risk reward will be not tremendous. So you should count on some deeper move and greater move to get a nice risk reward ratio. From that perspective, it's very difficult to trade such setups on the price action as we have. Very sloppy and choppy price action. It's very difficult to catch some significant move to get attractive risk reward ratio. That's why you should search for something, either some areas where you could place the tighter stop, or some other setups, I don't know. From that perspective, I think that personally I will wait for some clear moments that could give us some more extended direction. In particular speaking, from the bearish point of view, I would like to see first the breakout of 1380 area. That will give us the confidence that market probably will continue to move lower, and that just will give us the assurance and some confidence that we could catch the normal action, normal move, and that probably will give us more attractive risk reward entry than we have currently. Besides, today will be non-farm payrolls release, so what will happen on this market later, it's very difficult to say. That's why, as I said, personally for me, the major time frame to watch for is the daily chart, in particular how market will behave here, since we see clear levels to watch for. Maybe, by the way, this butterfly that we have on the hourly time frame could become the really reversal pattern. So market has shown the wash and rinse of these highs with the reversal butterfly, 127 butterfly. That could really start move to the downside with the breakout 1380 area. That's also possible. Well, if that is your expectation, then probably you could try to take it since you have the pattern. But it's a bit risky to take the short position until market will pass through this support resistance level that we have on the daily time frame. That's just my personal view on the gold market. I prefer to see the breakout first here, then catch the retracement, and with the hope that market will reach the lower board of this consolidation. That's, on my humble opinion, will be just a safer way to deal with the gold market right now.